guys. Thank you so much for joining us. Thank you to everybody for being patient. I know we got a little bit of a later start than we had anticipated, but I'm so happy to be doing this call. Kevin and Mark, thank you guys so much for joining me. Kevin, you are from the Celo Foundation. I'm really glad to be reconnecting with Celo. I was just saying before we started, I was fortunate enough to interview Renee probably 3 years ago or so. And it's now, following along and seeing what you guys are doing. I want to revisit the roots of Celo, because
Yeah.
this is something that really drew me in. And, before we get into Bancor being live there and everything else, just the mission, the vision and how it all started is really what I would love to discuss after you introduce yourself to everybody.
Okay.
If you would, please.
Yeah, great to be here. So I work at the Celo Foundation. I'm the chief of staff at the foundation. Been with Celo for a lot of the reasons that you just mentioned. The mission. I joined almost 4 years ago now. My background is in a bunch of things. So I started my career in banking, then moved into international development. Got into the crypto space because I live in Berlin. So went to a lot of meetups back in the day and continue to do so. And yeah, Celo was this place where they were trying to do something with payments, with finance, on in markets where you actually do see a lot of adoption for mobile wallets, for example. Like think about Kenya with M-Pesa. But at the same time, like there is like really strong need because there are people who are they don't have access to the international credit markets. You have to pay a lot of money to actually borrow. The interest rates are very high. It's cost prohibitive. Inflation is high. So all these reasons kind of made a lot of sense why crypto can actually help solve these problems. So I was definitely attracted by the mission of Celo, and I'm still here, and Celo continues to do the same thing. So we're seeing a lot of sort of traction. I can kind of talk a bit about the Celo mission. So the Celo mission is prosperity for all. So I'm in Germany, so it's prosperity für alle, and the idea was back in 2017 or so. I think the thought was like, if we have to connect the world in terms of having a sort of a stable way to send and receive money. So think of something like a global Venmo. How do you build that out? Using crypto, because crypto is good for all these reasons that we just talked about. But how do you actually go about building that? And the answer was, maybe we need to build our own chain, because Ethereum back then was still proof of work and prohibitively costly. And so Celo as a layer one was born, and beyond that, obviously there was this whole sort of innovation that was done, which is in terms of like, how do you map a phone number to a blockchain address, a blockchain public address, and how do you have different social identifiers to ensure that you can actually onboard a user. So these are things that Celo did very well. And the other thing was, if you want to send and receive money, you want to do that in a stable asset. You want to make sure that the value doesn't kind of change. So you also want to have like sufficient liquidity so that it doesn't depeg. So the whole idea was to we need to enable communities to actually have their own currencies. So because a lot of the work initially has been focused in Africa, there was issuances of more African focused currencies. You also have like Celo dollar, Celo euro, Celo Brazilian real, all of these issued by Mento, which is the stability protocol for Celo, but now is also like a issuer. So you can actually use Mento to issue local currency stablecoins, for example. And of course, I mean, since then, things have also like grown a lot, because we now, especially this year, have seen the launch of USDT and USDC natively on Celo.
Right.
Then, yeah, so that has obviously kind of brought more attention to Celo, because we see there's more growth, there's more opportunities for stablecoin issuers to sort of like use this infrastructure to actually activate more users all over the world. And also like think about like how you can actually have like last mile users, or retail users as we call it, like people who usually we don't talk about, like sort of classic degen mode, for example, like but But how do you sort of connect those users? And then, of course, we have also seen like large corporates like Opera wanting to sort of enter the space. They kind of created their own stablecoin wallet called MiniPay, which is part of their Opera Mini browser on Android devices. So all these things, I think, put together, kind of like has sort of been it's been very focused to sort of like go back to the mission of prosperity for all, and like how to sort of work on this by doing all these sort of I mean, internally we call them like different work streams, but like just sort of having these different pillars that kind of help solve these sort of different problems, and at the same time like have the sort of growth that we would like to see as a blockchain as well. Yeah.
And it's been an amazing amount of growth. I want to talk about a few of the things that you had mentioned. I want to welcome Mark to the call. Mark, if you would also, I want you to introduce yourself. I know that you're at a conference right now and you had to step away, so thank you for doing that. But if you would introduce yourself and maybe just tell us a little bit about the start of Bancor also, because I think that, I mean, it's so wonderful to see Bancor Technologies live on Celo, knowing Celo's mission and knowing where Bancor, originally started, like how it began.
Yeah, and you've identified the common thread, I think, pretty well. Yeah, it seems that Celo and Bancor were kind of cut from the same cloth, so to speak. Bancor's first, experiment in, in tokens, if you want to call it that, actually predates the blockchain by quite a ways. And it was a community currencies program called Hearts. And it was, partially conceived by, the Bancor founders, but then also led by a gentleman named Bernard Lieta, who was the co-creator of the euro. So there's a lot of credentials behind this idea that it's a good thing, economically speaking, to have more than one more than one common currency in circulation and let people choose which currency that they would like to transact in. And there have been many criticisms of the global five fiat supremacy that's kind of dominated the world since the 1960s, and it is kind of unhealthy. And so yeah, what Bancor wanted to do was to provide alternatives so that you aren't exposed to, for example, government corruption. And this is one of the things that I think very few people consider when they're talking about what it means to be at a financial disadvantage. For example, I've had friends who have, and let's not name specific nations, but I have had friends in parts of the world who were working there, that in order to withdraw money from your bank, you have to bribe the teller, right? Like that's just how it is. And when you get that kind of systemic, corruption in a banking system, it can, it becomes a weapon that oppresses people that are forced to live by it. And so having alternative currencies that that people can transact between themselves without the need for a centralized bank or something in the middle was seen as a pretty good thing to experiment with. And that's how Bancor's Hearts community currency program was born, and it worked extremely well. Like it's not like that was an experiment that failed. This was done not just in like extremely disadvantaged, or extremely financially corrupt systems, but it was also performed in places like the United States. I don't know, maybe you consider the United States to be equally financially corrupt. But the point is that it wasn't just in places like West Africa. It was also in in small communities inside the United States that do have access to a plethora of sophisticated financial infrastructure, but for one reason or the other, found that transacting in community currency was more convenient and better suited to what it is that they were trying to do. Things like tokenizing, like labor swaps. Things like, if I babysit your children, I want you to cut my hair later. That kind of thing. The problem is that when you have a lot of different community currencies coexisting, it eventually becomes pertinent to realize their value versus each other. What I mean by that is you might have a labor swap token where people are painting each other's houses or babysitting each other's children and so on. And that would work very well in that economy. But as soon as it needs to interface with something that's globalized or a part of, a financial system that exists outside of that community, things like, getting gasoline or getting, produce from a farmer that isn't local, these kinds of things require that currency to have an exchange rate. And so from that experiment was discovered the necessity of market making, essentially, but still remaining critical of the way that the traditional financial structures are set up. What Bancor wanted to do was to find a way to create markets automatically, where the exchange rate of these community currencies was not at the whim of a human who was in control of those markets. And it was literally from those beginnings that the automated market maker, the AMM, was first conceived and then deployed. And this was kind of happening at not just around the time that Ethereum was being, was rising to prominence, but actually before that. It was a godsend that we had a smart contract-based blockchain on which to realize these inventions. So Bancor is actually slightly older than Ethereum, and I don't think people know that.
There's definitely a history there. Kevin, were you going to say something? You unmuted.
No, I didn't know those things, so it's super cool to hear that, right? Like, how do you kind of like have like a value for a community currency, and how do you sort of exchange different community currencies? And I think this is also like going back to stable coins, right? Like that's how you kind of like peg value, because you want to peg it to like local currencies, making it easier for people to sort of transact. Yeah, I mean, there are so many things, right? Like, I mean, you want to make sure that there's not much of sort of like a cost of forex conversions for the local markets. But at the same time, you want to make sure you want to hold value in a stronger currency. So how do you sort of like, ensure those things? So yeah, I mean, those are the kind of things that we kind of think about quite a bit here. And I mean, I'm kind of, it's interesting to hear about the journey of a Bancor as well, like, how those initial days evolved. Yeah, I just sort of like just want to acknowledge that I found that pretty cool. Yeah,
it's a cool story, right? I was revisiting it. I was writing recently about stablecoins. This was the whole reason that I got into DeFi, that this like technology really kind of spoke to me personally, was because of the opportunity that it brings to so many who don't have these sorts of opportunities. And not to mention, I mean, we're always told, at least here in the US, you work hard, you save your money, you put it in the bank, and then when you kind of take a step back and you realize that not so many have access to bank accounts, to getting IDs to create bank accounts, or, the same sort of resources that I might have, that was what really had spoken to me. So I was writing this whole big blog series about stable coins and inflation and things recently, revisiting the Bancor story, looking a lot into what, is happening on Celo specifically now. You mentioned Kenya. Do you guys, is this where you're seeing most of your adoption? Because really, you guys have been seeing so much growth. You said over the last 2 years, you would know better than I would, but I have personally really noticed so much in the last maybe 6 months to a year, right? Yeah. Why Kenya? Why Africa? Is this an area where you're seeing this is really needed, really necessary right now? Where, I mean, like I said, you're on the ground. You guys were just at 2 different conferences in Africa recently, right?
Yeah, I think Kenya has always been pretty close. I mean, there's also other markets like Nigeria and Ghana where we have seen significant sort of growth for Celo. I mean, I think there's more recent work happening in Kenya for sure. I mean, with the issuance of Kenyan shillings, the Celo Kenyan shilling. There is a project which is working on sort of lending based on sort of social proofs, sort of like peer lending.
This is Haraka, right?
This is Haraka, exactly.
They came on my radar too.
Yeah. So there's definitely like a like it's like a for a specific purpose, but at the same time it's pegged to the local currency. So there's like a sort of a way for you to sort of solve the sort of lending problem, and also making sure that the lending is done in a sort of socially credential way where there is like pressure, but at the same time you are able to verify the user who's actually, or the sort of borrower who's able to get this sort of access to credit. So I mean, besides Kenya, of course, there's growth which is happening pan-Africa, and I think it's mostly got to do a lot recently with MiniPay. So MiniPay has seen like almost 3 million wallets users activated.
It's amazing.
Just this year, starting from somewhere late 2023, and I think that's one of the main reasons for the great amount of like new users that have been onboarded. There's this whole thing about Token Terminal having this daily active wallets. So if you see, there's like a bit of a hockey stick you can see in terms of the growth of users since, I would say, first quarter of this year. So that's one of the primary reasons. There's also, Mento, which is the stability protocols, also the digital asset issuer, which also issue the Kenyan shillings.
The Kenyan shilling, right?
And you can see again, like, not just with Kenyan shilling, but like with CUSD, there has been like a significant growth in that as well. So I think when you combine all these things, you see like, the sort of like the growth in terms of numbers. But I think what is also unique is, this is a story that has also captured, players like Tether and Circle. They are natively live on Celo now because, they see the sort of opportunity to do this with Celo. But at the same time, there is, there are some key features on Celo, like gas abstraction. So you can actually pay gas fees in a whitelisted ERC20 token on Celo. Community has approved on Celo to have like currencies like USDT, USDC to be used as gas currencies. So you can actually, do these kind of very low cost sub-cent transactions. If you look at like transaction fees as well, like it's on Celo is probably one of the lowest at the moment.
They're so low.
Yeah. So if you bring the fees so low, and if you want to also do transactions, and you can do that in stablecoins itself, yeah, that just sort of like makes it much easier for someone who is transacting like $2, $3, $5, like really low values. Because I mean, you and I probably, if I'm sitting in Germany, I send you some money, I probably am not going to think too much about like 1% cost or 2% cost or something. But like someone who's sitting there in Africa, or somewhere in Southeast Asia, or when you really want to onboard people as well, I would say from Web 2 to Web 3, or like give users those experiences, you want to keep those costs as low as possible. So I think we have been trying to solve all these pieces, and I would say that's probably the main reason why we have seen this sort of like uptake in the recent past. Yeah.
Right. Well, the stablecoin adoption and the transactions, both.
Yeah.
I recently, I mean, at least within the last month or two, really noticed. I think it was just the beginning of August. You guys had passed ETH mainnet, right, for transaction count, and just recently your stablecoin adoption, right? I think you passed Phantom and a couple of others. So it's really nice to see. Mark, you guys, sorry, I know I've been speaking about Celo a little bit. I want to talk about Bancor being on Celo. Maybe you can tell us a little bit. It's CarbonDeFi specifically, right? But I think Celo, when I was pointing out the precision of, CarbonDeFi and the ARB Fastlane both, it was a Celo transaction that really brought it to my attention, right? And I had to actually send you a message. What is this number with 15 zeros? Like, it was the quadrillions, right? So tell us a little bit about Bancor Technologies making their way over to Celo, and what you're offering their community as well.
Yeah, sure. So CarbonDeFi is a generalized model of concentrated liquidity, which was the next leg of the AMM development. And so the first version of concentrated liquidity was introduced by Bancor in 2020. And then about a year after that, Uniswap v3 launched their version of concentrated liquidity, and I would say now concentrated liquidity is just a generally sort of a ubiquitous concept in DeFi. It hasn't necessarily dethroned the canonical like Bancor v1 constant product style liquidity pools, but because of the agency that it offers, I think that it has garnered some additional traction. CarbonDeFi is trying to like make that user agency, the priority of how the protocol is described. It borrows from concepts such as like eBay. Like I over the years, I've often referred to CarbonDeFi as being like an on-chain eBay, where people can quote any price for the thing that they're trying to sell. And the fact that these are all token-based assets doesn't really matter. But you could imagine that if we were making, if the AMM was never invented and everyone was trying to buy and sell cryptocurrencies in a decentralized way, eBay wouldn't be too bad of a choice. People could put up whatever tokens it is that they're trying to sell and then quote the prices that they want to trade at, and then wait for people to take those orders. So CarbonDeFi is really looking at that kind of level of user prescribing exactly what it is that they want to happen for the protocol, and that the protocol has to has a mandate to honor what it is that the user is asking for. And that's that's essentially the topic of the talk that I gave at Napoli earlier today. Is how do we get that kind of information from the user, and how is it translated into a smart contract environment where these kinds of calculations can be performed with ridiculously high accuracy, as you were referring to when you were asking me the question. But on Celo, it feels a little bit different to how it felt when we first launched CarbonDeFi on Ethereum. Because at the time when CarbonDeFi was being designed, I had imagined that we would end up with like a lot of swing traders, if that makes sense. Like people who have a specific bias on how the market is likely to evolve on two tokens that they are interested in trading. So like my favorite pair is Compound and Aave, because they kind of represent the same, the same asset class. They're both tokens associated with lending protocols, and so they tend to trend together relatively well. But they're still volatile versus each other, and so you can actually trade that. I've been trading those two tokens versus each other for a long time, long before CarbonDeFi was invented. When we go to Celo is like, like all of that degen, crypto trading stuff is fine, and clearly there's an appetite for it on Celo. But I feel like the soul of Celo is really more about these stablecoin economies. And what was really nice is to see that Carb is general enough that even without the culture of trading, moon coins versus each other, trying to generate quote unquote generational wealth, as is the custom in crypto Twitter, that actually you can do it to facilitate actual proper financial structure.
Mark, you cut out for a minute. Is it just me, Kevin, or is he cutting out for you as well?
And so now instead of having quote
Mark
prices and bidding prices.
No, Mark, you lost us.
Oh, sorry. Okay.
Rewind it just at 30 seconds or so.
I apologize. Can you hear me now?
Yes.
I think you're freezing a little bit.
Can you hear what I'm saying now?
You're freezing. We can hear what you're saying now. You're
okay.
freezing.
I can wrap up what I was saying, because I feel like I was beginning to ramble a little bit. But
I thought you were getting into the more interesting parts.
I was actually.
Let me turn off my camera to save some bandwidth.
Yeah, no, you're not starting to ramble. You're actually. Yeah, can you hear me? Okay. Mark, you were talking about Celo specifically with the stable coins.
I'm not sure if he can hear us.
I'm not sure he can. Well, let's remove him from the stage for a minute because he's not muted. So, what he was saying, I'm assuming, is, I heard him start to say that it's different on Celo. It's not that sort of swing trading, and yeah, the Aave and Compound are the same sort of asset class, right? But I think there's more depth to what is going on Celo. I'm assuming this is what he was going to say. I know this is my own thought as well, and I've expressed it, but I'm obviously not the only one who's gotten this sort of feeling that there is, I don't know how else to say it other than that much more depth to what's happening on the chain right now.
Yeah, I think there's a lot to that because one is, we were talking about stable coins quite a bit, and also like what we call classically as long tail assets. So long tail stable coins like Kenyan shillings, West African franc, you name it.
Right.
I think there's a lot where CarbonDeFi and just Bancor generally can play a big role because, I mean, the point in terms of like maintaining peg, I think it's pretty. I think there are like those strategies that I see on CarbonDeFi on Bancor generally, which allows you to do that, and also I think. One thing that you want to do is also you want to take hedge positions against other assets. So,
Yes.
so that's something again where you can protect yourself from volatility by taking positions in other assets. I think that's something that also I feel CarbonDeFi is a great add for Celo. So it's great that you guys have thought a lot about what a trader actually needs, and bring that on chain right from order book, which is kind of sounds trivial, but it's pretty difficult for people who know to bring on chain, and then
Right.
have all these other features, which allows you to sort of like make it easier for traders, to keep trading, accumulate earnings, all that kind of stuff. So I think generally I feel like this is good because what we are seeing with the issue of all these tables is, they do serve like a purpose to, have, meet local market needs, but at the same time you want to develop depth in these assets. So you need a pretty, a great marketplace to actually enable that. So you need a place where people can trade. There can be more depth and liquidity, which is again, I think another thing that I think you guys probably have a good handle on, because I think tokens generally need to have that sort of, especially as you work with projects, which are going to be issuing tokens, and they're going to be issuing tokens for a certain specific market. Like, I want to solve the remittance problem in between West Africa and Europe, for example. And if I'm a project, I might need to sort of use some form of token economics to incentivize behavior, to incentivize users. And then there's like a great way where you can actually use CarbonDeFi to ensure that there's some kind of target price, for example, or there's some kind of mechanism where I can kind of make sure that the project token is not affected as badly during, especially like a cycle like right now, where you're sort of in a bearish sentiment, but at the same time, you will be wary of launching a token, for example. But if you already have a token, you can kind of protect the price to some extent. So I think those kind of things sort of like I think are very important strategies, which in the conventional markets you just buy back your tokens, or you do something. But if you are like a small project, especially, a lot of your value lies on chain, and you want to sort of protect that. I think then in those kind of situations, I think I do feel like there is something to CarbonDeFi actually helping there.
Thank you for pointing that out. It's not easy starting a new project, right?
Yeah.
Getting all of the funding and creating any sort of a marketplace. I mean, these are obstacles that I think projects have been dealing with for as long as DeFi has been around, right? And they're really, I mean, you kind of see different sort of launch pads and things of that sort. And Carbon isn't a launch pad, right? But it is an option, and I would say an attractive option for creating that sort of marketplace, especially on Celo with the stable coins. Because like we said, maintaining that peg for stable coins, or for, I mean, we know we say stable coins just generally speaking, right?
Yeah.
But any sort of volatility, that's scary for a project. It's scary for token holders. Anybody who is really relying on this asset to maintain that peg. And so this was something else that I had just written about. Not many projects realize that there is this there is this DEX that can offer these sorts of features where you can actually, really maintain that peg in a different way than, algorithmically or what it's been previously. Mark is back up. Let me bring him up here. Mark, are you with us again?
Yes, I'm here. I'm sorry. I think I exhausted my data roaming, and so I've connected to the local Wi-Fi.
That's okay. I don't know if you heard anything of what we were saying over the last few minutes. I saw that you'd been down there for a minute. I didn't bring you up right away.
No, I mean, I tuned in around about the time we were talking about defending stablecoin pegs, and I think the importance of this really can't be understated. The whole point of having a stable token is that it really should emulate the the price of the thing that it is representing. Meaning that if you've got a Kenyan shilling on the Celo network and you're trying to convert it to the Brazilian real, then you should expect to get roughly the same exchange rate on Celo's infrastructure as you would on a Forex desk, for example. Now, Forex desks will still charge, transaction fees and things over the top. And I know that there's a little bit of wiggle room because the price of something is never really known. But I think there's like a 95% confidence interval that we can apply to things that make them that would satisfy, I think, the expectations of anyone who's transacting in that token. And so peg defense is, it can become a problem that should be attributed to a protocol to try and solve. And interestingly, AMMs are very, very bad at it. The reason why AMMs are bad at it is because every bought or sold, the price has to slip. Like this is intrinsic to AMM design. And so really what AMMs are supposed to do is price discovery for things that have no known price. And they're very badly equipped to support things that have a known price. What's interesting about CarbonDeFi is that even though it has that AMM or borrows from AMM mathematics under the hood, the ability to what we call to create what we call infinitely concentrated positions, meaning liquidity that's described at a singular price interval, means that you can support volumes up to the amount of tokens that are denominated within that order without the price changing at all. And so this means that if someone was to create like a Brazilian real versus Kenyan shilling market for that day, they could literally create an exact exchange rate that wouldn't move no matter how much people tried to interact with it. And so I think that this is something that I'm actually behind the scenes sort of working on when looking at how the stablecoin markets on Celo that we've just recently created are performing, to try and actually work out, like there could be strategic regions where we can concentrate the liquidity, like I said, infinitely thin, so as to allow users at least the confidence that no matter what happens that day, they will be able to exchange, tokens, within, like I said, that 95% confidence interval at the, let's say at the open of business or something like that. But yeah, it is phenomenally important, and I think stablecoins especially are becoming sort of the lifeblood of cryptocurrency, which is super ironic, but I enjoy it. And yeah, it requires a new approach to automated market making that kind of transcends what the AMM was originally designed for.
Kevin, if you want to add to that.
I have a couple of thoughts there. So I think, what I see interesting about what you guys are doing is there are two things, right? So one is, because even if you take a concentrated liquidity position, like, which is, I mean, it could be like it could be infinitely thin, so there's no price discovery, but even if you keep it like within a certain band, you are in many ways incentivizing trading, right? You are asking traders to come arbitrage and bring the price to the real value. So I think there's a lot there as well, because I think the product actually captures both those things, because what Mark just said, I think, is in terms of like making sure the peg is maintained, especially for projects who are like really, if I'm a project which is doing lending work in Kenya or Nigeria, and I want to make sure that I have on-chain liquidity, you want to maintain the peg for sure. But what you also want to do is because you've created these products and tools, you also want to incentivize those traders to come in and arbitrage and make sure that the peg is maintained. So I think you kind of like have like both those things covered, which is very interesting, because you provide like really thin sort of like you provide as close to the value as possible sort of a peg, and then you also provide like a range, which I think is pretty unique.
Mark?
Yeah, it's like I said, it's defending the peg is like, it sounds simple. Like if you were to ask a normal cryptocurrency participant, what does it mean to defend the peg or something? Or what does it mean when something is trading off peg? What they really mean is, there's an asset that they're trading on a blockchain, and maybe it's USDC, maybe it's USDT, maybe it's CUSD, maybe it's, CKS. And they go to Google, and Google says the price is this. That's actually a fiction. Like it's a polite lie in finance that there is like a singular price that you can report for something. The statistics of it are kind of interesting, because I expected it to be something like a Gaussian distribution of like different prices sourced from different market sources, but seldom that's true. In general, it's really just the most recent trade data, scraped from whatever exchange or whatever some market maker has quoted their price to be in the last few hours. But that doesn't necessarily mean that things trade at that value. And this is the complexity that you have to face when you're actually creating the market itself as it might exist on a blockchain. Because even though we can create like a very specific price quote, we still need to create some elasticity in that price and give the market time to bid things up or down. And we've seen this before. So for example, you might recall when Silicon Valley Bank started to have all of its problems, it surfaced that Circle kept a lot of capital in that bank. And so people's confidence, not in the US dollar, but in USDC's ability to be redeemed for US dollars came into question. And so now, people say, oh, USDC is off peg, but it's not really off peg, because USDC is in itself, a token that can realize its own value irrespective of what's happening with the US dollar. And then, after market confidence was restored, then USDC begins to trade again at 1-to-1 versus the US dollar. So when we talk about things depegging, it's important to realize that there is always it's a small amount of depeg. Often, things like USDT will actually trade above what the US dollar is worth. And the only reason for that is that within the economies that USDT is prevalent, some people may be in a rush, for example, to get out of a risky asset like Ethereum or a risky asset like wrapped Bitcoin or something. And so they're happy to accept a slightly less than the market rate, as Google would report, in order to get back to the safety of USDT. And that can mean that USDT becomes a very sought after, token in a blockchain environment, and this causes its price to appreciate. And you need to allow for that kind of behavior. It's not a prescription. We don't say that these tokens have to all the time obey whatever the price that Google says these things ought to trade at. You need a little bit of wiggle room in there. The point that I'm making is that in order for these things to be useful, that wiggle room needs to be at least a little bit predictable. If someone says, I'm paying my employees in Kenyan shillings, and those people say, well, I would rather, transfer my Kenyan shilling into, CUSD or something on the Celo blockchain. the calculation that they do in their head of what the exchange rate is between the Kenyan shilling and US dollars needs to be very, very closely mirrored by the result that they achieve using sellers markets. But at the same time, if everyone is trying to get out of the Kenyan shilling and into CUSD, then we would expect that the market behavior on sellers should reflect that in some way. Like if there is a surge of demand and supply is low, then there should be a market ramification that reflects, that economic paradigm. So yeah, I think Kevin said it perfectly well. If your ambition is to keep the price predictable, there are ways that we can do that. But it's not necessarily the case that we want to create infinitely concentrated liquidity all at a single price, because this takes away the market's, let's say, right to express itself in how it values, different tokens versus each other, regardless of what Google says the price is. And it's nice that we can do both of those things on CarbonDeFi.
I just realized we have about 7-10 minutes, something around there, 5-10 minutes left. We were talking about the Kenyan shilling really quickly, Kevin, but there's a new token that just became available, right, on Celo. This is a Philippine.
Yeah,
yes.
Yeah, I mean, this is something that we expect to happen on Celo more often. We'll be making some more announcements as well of some currencies that are launching in the next weeks as well. So I think what we have obviously sort of done in the past well is to make it easy for people to issue stable currencies, but at the same time, what we're also now seeing is that other stablecoin issuers understand this, because I mean, the fact of the matter is that in forex, in the real markets, or what we call as traditional markets, or on crypto as well, everything is USD dominated, right? Like you are seeing almost 85 to 90% dominance of USD assets. So you want to make sure that it's kind of easy, as well as there's an ecosystem which allows these assets to sort of flourish, and that's what we are seeing with more issuers as well. So there are more issuers who are interested in bringing not just the Filipino peso, but like other currencies, the real, peso of other countries like Colombia, or maybe even the South African rand. So there are these sort of currencies which are not your G10, G20 currencies, but sort of more long tail, where there is some kind of a use case that people can actually leverage on. And at the same time, there is this opportunity as well to do all the sort of DeFi stuff, where you can have some kind of a spot market, or you can have some kind of trading activity around it. So it sort of kind of helps meet those needs. And that's what we're seeing, and it's pretty exciting because we have a Filipino community, and we've done pilots there before. We have people in the team who are from Philippines, so it's very nice to have a peso launch as well. So yeah, that's pretty cool.
Yeah, that's awesome. Well, congratulations on that. Mark, how would someone go about specifically trading any of these on Carbon? We talked about Carbon and maintaining pegs, right? But let's talk about the trading for a minute now with these new tokens becoming available on Celo.
Well, yeah, again, it depends on their expectation of how the market is going to develop. So let's think about why someone might want to trade or might not want to trade. So let's say that you have, you have a large number of, let's say, Brazilian real, or C real on Celo, and your objective is to move it into another currency like CUSD. You might go to the blockchain that day, or you can go to a forex desk that day and find that the exchange rate is a little bit lower than it was last week, and you think, maybe this is a one-time thing. If I just wait another few days, maybe the rate will come back up, and I will get the number of US dollars that I was expecting before the rate came down. And so what you can do is you can go to Carbon and literally quote the exact number of US dollars that you were expecting to get for these Brazilian real. And there's no guarantee that anyone's going to fill your order, because the market could continue moving away from your quote price. But if it's reasonably close to where the market is currently trading, and the real bounces back, then you can expect that someone will want to take those real from you once the market reaches, you know, a price that's well equilibrated with your asking price. So that's one way you can use carbon. And let's just call that a plain, you know, plain limit order. You could also say, well, maybe the real is gonna bounce back, and I could get slightly more US dollars than, you know, than the exact amount that I was quoting, like 1 to 2% more or something. And so what you can do is you can quote your prices such that you know, as the real market price moves up through that range, that you're slowly exchanging reals into US dollars. Someone who's a little bit more a bit more trading minded, like someone who has a bit of a day trader or forex trader mentality, might be looking at the same chart, but their objective isn't necessarily to just get all of their reals into, you know, US dollars. They might be very happy to then buy reals from the market at a low price and then sell reals at a high price and then reaccumulate them at a low price and so on. And so what someone with that specific mindset would do is create bidding prices below the current market price and asking prices above the current market price. And so when the market is, you know, hungry for reals and people are taking reals from the book, then you're selling into that buying pressure. And then when the market is changing its mind and is now trying to get out of reals and back into US dollars, you then offer those US dollars slightly below the current market price. And as long as there is a quasi-sinusoidal sort of reciprocation between those two price boundaries, then you can actually accumulate value inside of your portfolio. Both the US dollar and real dollar, and Brazilian real balances of your trading position will begin to accumulate over time. And the value of someone doing that, by the way, like, you know, you might think that, oh, you know, how parasitic of someone to do this, to take advantage of these market situations in order to profit for themselves. But actually, they're offering an extremely useful service. What they're saying is that when the real is coming down in price, I will happily buy it from you for the price that I'm asking. And this gives market participants another option. This is like the most important thing about financial markets that I feel like most people don't have an appreciation for, which is that we need quote prices. We need people to have like an open position that says, this is the price that I'm asking for, and anyone can take it whenever they're ready. This is like the lifeblood of any marketplace. And so for someone to come in and try and day trade, you know, the real versus the US dollar, is actually servicing the needs of the people that need to take those markets because they're trying to get in and out of these different, you know, ways of representing value. So yeah, those are I'd say that those are the two main perspectives that I would offer, right? If you have a specific price target in mind, if you're trying to get out of one stable token into another stable token, but the market doesn't yet agree with you that, you know, that exchange rate makes sense, you can still quote that price and wait for the market to agree with you, and it will be executed at some date in the future. And if you are looking at the oscillations in the value between two different stablecoins, then that volatility represents an opportunity. And you can then service the needs of that market literally by buying things when the price is going down and selling them when the price is going up. It's that simple. Everyone is happy when people do this. It creates a thriving marketplace that make people feel more comfortable, because when they're looking to exchange things, there is always de facto liquidity to support it.
Mark, thank you so much. I know we're a few minutes over, so I apologize. Thank you both for sticking around, and thank you to all of our viewers, everybody who's joined the call. Anything that you guys want to bring attention to, any major milestones recently, anything interesting or exciting that you might have coming up, or maybe that is going on currently at the moment. It's like I said, Kevin, I know that you guys are at a few conferences right now, or a few events, I should say. I don't know if they're conferences. Mark, I know that you're currently at one right now, but I want to give you the opportunity to just throw anything else out there at our viewers if we haven't already touched on it. Kevin, you want to go first, if anything?
Sure,
Yeah.
sure. I mean, I completely agree with this whole FX trading thing, because that's essentially what happens in markets, and we want to bring that on chain to make it as efficient as possible. And people forget that, like, I mean, AMMs are great, but like obviously any kind of marketplace has its limitations, so you need to sort of fine tune it. And as the industry progresses, I mean, from what I'm seeing, this is great. Like, you guys have all these features. And I think it's amazing for stablecoins. So, we've been trying to create FX spot markets on chain, and, we have had some success. So want to continue that conversation as well with Bancor and CarbonDeFi. We actually have a whole community initiative around this called Stabila, which, we are trying to sort of like bring more awareness about all these sort of nuances in terms of, how you can actually use stablecoins, not just like some not just in a sort of purely payments or sort of like this umbrella bucket of real world assets that we try to lump everything in. Like, there's a lot more to it, like, because it is pegged to a real value of an asset which has a lot of demand and markets around it in the sort of in the traditional world. So we're working on that, and so that's something I do want to sort of highlight as well. And you're right, like this is like a conference circuit now. We're having Eat Safari right now. We just had Celo Gather in Kenya, and yeah, I'll also be a token. So if anybody wants to grab me there, happy to chat about all these things. Yeah.
Awesome. Thank you so much. Really wonderful to see everything that you guys are doing. I will say you guys are wonderful at keeping the community updated with photos and everything else. Like, I personally really enjoy seeing, like, not just hearing about your feet on the ground, but like seeing it, so I have to commend you guys on that.
Yeah, shout out to the Marcon team. I'm sure they're listening in.
Yeah. Mark, anything that you want to add for Bancor or CarbonDeFi in general?
I'll just say that the UI UX has already undergone a fairly significant facelift that is actually continuing right now. So anyone that hasn't visited the app in a while, I strongly recommend coming back and having a look at how we've simplified the process. The proprietary charts, I think, should be online relatively soon if they aren't already. And there are new features being planned. Like, CarbonDeFi isn't over by a long shot. But I have long since adopted the philosophy that I don't talk about future features until they're ready for release. So it's a watch this space. But yeah, like we're always hard at work, and I'm really looking forward to discussing what the next feature set is going to look like on top of what I think is already a phenomenally well-equipped marketplace model.
Awesome. So maybe not future features. Mark, mute yourself now for me. Thanks. Maybe not future features, but I know that, at least you and I will be at DevCon. Kevin, I don't know if you're going to be at DevCon in November, but would love to meet IRL. If any of our viewers, anybody tuning into this now or later is going to be at the conference or the upcoming conferences, reach out. And in the meantime, my DMs are open always, and you can join the CarbonDeFi Telegram at CarbonDeFi.xyz. Kevin, what's the best place for everybody to reach out and find out more about Celo?
Yeah, Celo.org is a great place to start. Follow the Twitter x.com account. Yeah, you can reach out to me on k@celo.org as well as my Twitter account.
Awesome. Well, thank you guys so much for doing this again. I know we went over, we got to a late start, but we've got 1,200 people here that tuned in. We appreciate you guys so much, and so glad that you were able to. And I look forward to connecting soon, outside of these sorts of calls, but kind of just more so within the Celo ecosystem. Take a bigger part in it. Thank you again, both of you.
Yeah, thanks a lot.
Thank you, Jen.
Of course.
Thank you, Kevin.
Yeah.
Thanks.
We'll catch up with you guys soon. Thank you, everybody.
Thank you.